We got the latest reading on inflation, and here is a chart from Trading Economics of 1 year inflation, a 5 year chart, a 10-year chart, a 25-year chart. And I think where people get confused is that when you see that inflation's up 2% from a year ago, they think inflation has increased 2%. They think that they're paying 2% more for things. Really, it's a comparison to a year previous. And you got to compare it to a shorter time frame. You look at last month to this month, and it's coming down. That's where people get confused. And I know it's about your grocery bill. I know that food prices are still high, but a lot of times people have said inflation is going to go higher, and now they're going down the ship. They have to find ways that what they said wasn't wrong. Of course, some items are higher in price, but you can cherry pick those and make a big video about it to scare people. Inflation is coming down. Food prices have been sticky. They're starting to come down now. And while you'll see things that cost more, there's also a lot of products that cost less. And I'm not one of the people who's going to go down with the ship if I make a comment and then it starts to turn out that I was incorrect. And I'm looking into something right now. I might be changing my mind on something. Specifically, I'm talking about real estate prices. I'm going to look into this. And while I am looking into it very heavily, I want to figure out what's going on because all the signs are there that real estate prices are going to decline. If we enter a recession or depression, I think they'll decline a lot. But I'm being terrified by the resilience. There's just not enough homes. There's too much money being created, too much inflation that's pushing the home prices higher. But I'm going to look into all this, tell you exactly where I stand on it once I've had a little bit more time to do some more analysis. The BRICS nations are launching their gold-backed currency, which would make it the only existing currency that is not fiat. US dollar is backed by nothing. And what do I mean by backed by? When a dollar or currency is backed by gold, you get a certain portion of gold for that dollar, and that holds the value in the dollar. It will always have the value of the stability of the nation, the domestic product, the productivity of the nation. But when you back it also by something like gold, then it adds specific and understandable value to the currency itself. But with these BRICS nations having the old gold-backed currency, do you think that would be good for global gold prices, or do you think it would be bad for global gold prices? I'll let you decide what you think. But China has already loaded up on gold and has been doing it for a while. I've been telling you the whole time and showing you how gold's coming out of Sweden straight into China because they're trying to hide their purchases, and they're doing it with proxy purchasers so that you can't know how much gold they have. And once in a while, every few years, they might say, okay, here, we'll tell you how much gold we have, and it's another made-up number. You never know what's going on there, but they took in a whole lot of gold, and now they're launching their gold-backed currency, which means a lot of the strength in the US dollar is because the US dollar was the cleanest shirt in the hamper, the strongest or best option among many poor options. And I'm saying that in terms of how it would hold your wealth. But now there is a cleaner shirt in the hamper, a gold-backed currency that anyone can use. And a lot of nations, not just the BRICS nations, are going to be getting involved with this. Gold prices had a nice pop, $25 or so, a couple days ago. That was due to the fact that the Federal Reserve, people start believing, wait a minute, maybe they're going to slow rate hikes, maybe they're going to not do rate hikes, they're going to pivot and start coming down now. They were premature. Gold prices jumped up a lot just on the thought of that. But I believe the Federal Reserve is going to do exactly what they said they were going to do this whole time. They're sometimes wrong, sometimes they change what they're going to do, but this whole time, all they've said is that we are going to keep raising rates. We're going to raise rates more. We're going to keep rates higher for longer. And people are cheering them on because they're trying to kill this inflationary problem we have, which was a problem, ironically, created by the Federal Reserve themselves. Did we just experience a nice 13% gain in the S&P 500 in the first 6 months of the year? Or has it all been simply a bear market rally? I'm sure you can guess what my opinion is, and of course, I hope that you have your own. And just in case you're a first-time viewer and you're curious what my view on this is, I believe it was a head fake, a bear market rally, and that we've got a lot more downside to come in the stock market to manifest or play out what's happening in the economy. They're detached now, the stock market and economy, but eventually the economy could reflect in the stock market. I do not believe that the economy has shaken out most of the excess. The stock market certainly hasn't either. In the wholly managed economy, the Federal Reserve and the politicians can control the stock market through policy decisions, like how much money should we create today? By watering down your purchasing power of the US dollar, they can default through inflation while driving home prices and cryptocurrency prices and stock prices through the roof. For a while, anyway. The hard lessons will come for most people, many of whom will get totally blindsided. Unfortunately, we're about to stand in front of a harsh mirror, which is known as a recession. All the prognostications and promises and expectations of nearly all economists and talking heads and blab tubers are going to fade away before the growl of this next recession. And this is happening at a time when we're losing our monopoly on the petrodollar. And the BRICS nations have established their own reserve currency that they're all using for trade and transactions instead of the US dollar. And at a time when the economy is weak, people are having financial difficulties. Make your own opinions. Mine is that I'm very glad to be cautious of most stocks right now, which does not include those winning picks and our published opinions. I can be stress-free, educated, analytical, and poised to pounce on what will be numerous opportunities that are just ahead of all of us. As you'll see from my personal portfolio holdings, my answer is gold miners and oil, the greatest gains from which shall appear in time, and in a massive way. That's my quick intro to the Peter Leeds exclusive. It goes on further to talk about target acquisition, long-range surveillance, and market intelligence. And lastly but not least, my personal holdings. And you can get started if you want to join the Peter Leeds Army, and you get the Peter Leeds exclusive every month. And it starts at $3. Pay what you want. Not everybody wants to put out $199 for the newsletter just to get the stock picks. Maybe you want to see a little bit about what's going on with the way we're thinking about the economy, how it's going, how the markets are going each month, ahead of time and looking back. Then you just join the Army. Show some support, and we're going to work super hard for you guys.